Bitcoin has just broken its bullish channel, and what's crucial is that we've just validated its structure. What could come next? And how significant is it that Ethereum has reacted in a high-interest zone? Now, you're looking at the 4-hour time frame chart of Bitcoin. Take notice of how we've updated the guideline of this bullish channel. See how this alpha angle has been working wonders. If we then look for its cousin, we'll realize that this is the level where major institutions have been operating all this time. This is when we must pay close attention to the fact that the price has reacted to this level. Now, if we switch to the 1-hour time frame and observe, in previous videos, we were saying that this entire range was a bullish accumulation process. We were also evaluating this structure when the price was around these levels. Our message was clear: despite having experienced a strong bullish impulse, we should expect another similar one from this point. Maybe he's setting a little trap for us to explore this defensive area. Many short sellers fall for it hook, line, and sinker, and then he makes his move. Something like that. In the last live session, we delved into a 5-minute time frame in this entire area, delivering a clear message. When we were in this zone, we noted that the loss of this structure would only lead us to anticipate significant explosiveness in Bitcoin on this 5-minute time frame. You already know it. The defense zone is the boundary that will determine whether they want to invest time here or go for something strong. The tricky part is keeping an eye on this level to understand the message, comrades. Returning to the 4-hour time frame, you've just seen why we placed so much importance on this event. A whole market trap that was sure to push the price upwards, not just once, but even on 2 occasions. Now, take a look at the bearish correction we're witnessing in the market. It's entirely understandable. If you notice, Ethereum is also reacting to a high-interest zone, and it was expected to have significant chances of responding to a visit to that structure. When we take both Bitcoin and Ethereum and see them dancing to the same tune, that's when we must give great importance to these structures. Zooming in a bit on the 1-hour chart, we certainly emphasized this bullish accumulation process and saw that the price had broken the creek. The creek is this horizontal level that separates the accumulation zone from the rest. Seeing this breakout and then witnessing how we were being impacted against the creek, against the origin of the breakout, we moved to a 1-minute time frame. But here, what we were observing was how the price came to attack this macro creek, where we clearly identified institutional absorption. Seeing that the price had already broken its creek on a 1-minute time frame, we were analyzing this flat pattern, and the message was to be bullish in the crypto market in the immediate term. Here it is. All right, there it is. All right, what do we have? All this in itself is a trap. At the micro levels, it's the trap within the trap that is coming and confirming. What do we see here? Damn! Immense volume on the fall. Absorption. Falls again. Immense volume. Absorption. It sets the trap. And immense volume absorption, well, we've broken the creek, validated the creek. Here they are working the flat pattern. So here we are in the opportunity to look for an excuse later to get back in long. Now, in Ethereum, we've seen this accumulation that has led the price to look upwards. And now, we're impacting against that significant level, just like Bitcoin. And now, look at Cardano. Here, we've been working on a distribution, a compression against a relevant level. After that, these whales going short in the market are channeling the price on Cardano. Basically, if they go short here, they don't want to see their position in jeopardy. Hence, they create these types of scenarios, always in their preferred direction. Obviously, this cannot be eternal, but these are structures that work. Considering this, we realize that smart money has been working this alpha angle. Notice how well it has been functioning. That's why the price has come to seek this structure, one that we already suspected the price could reach sooner or later, even expecting a trap. And here we have it. This is when we give great value to this market trap, as seen in Cardano, in the same way Bitcoin and Ethereum are doing, of course, in their own price structure. Now, we'll share with you what we think will happen next in the crypto market. Are we bullish or perhaps bearish? We'll tell you now, but before that, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. And before moving on to Bitcoin, look at what Polkadot is doing, as it is truly revealing. Let's zoom in a bit and see how, on a defense zone they marked for us, they've set a market trap, just like Cardano, Ethereum, or Bitcoin, and now they are reclaiming that zone. Remember, the driving force that recently led us to seek these long positions in the crypto ecosystem was a precursor called traps on relevant structures. Now, I pose a question. What are we seeing here? Leave your answer in the comments. Now, take a look at the working angle that Solana has. Also in its 4-hour time frame, by the way, how they've come to seek the structure they're really working on. Hence, it's normal and understandable. The reaction. A reaction that is further defended, and quite literally, by a very clear and evident defense zone, which, if we zoom in, has even been trapped. Let's be clear here. The predominant force, and there's no doubt about it, is this bullish momentum. And now, we are in a corrective phase that recently set a market trap. A market trap that pushed the price to look upwards. We can't forget this for the short term, as given the recent events, of course, we might consider being bearish for the immediate short term. Let me explain. After experiencing this trap, being aware that we are at a market extreme, we can expect, why not, some kind of reaction and attempt at replication. A replication that, in my opinion, would truly be part of the correction of this bullish momentum, which we give so much importance to in the short term. At some point, the price, who knows, maybe on a median line, would then attempt to replicate the bullish momentum. And here, we will see if that hypothetical replication is able to penetrate relevant structures, or, on the contrary, fails. As for Polkadot in its 4-hour time frame, we're going to say something very similar. Of course, we attach great importance to this trap and this bullish excursion. If you ask me, everything indicates that they want to look for some kind of replication. What this tells us is that this bearish momentum, we'll see when it ends, but they could perfectly come to seek a replication as a correction of the bullish momentum to later try to find that replication. And as mentioned, we'll assess at the appropriate time whether it makes sense for it to fail and go away, or on the contrary, prosper. When the time comes and in advance, we will analyze it. As for Cardano, here we have the market trap, which may seek a replication that it would look for later, or an opposite replication, to of course try to penetrate a creek, a relevant level, where everything will be decided. And this correction could perfectly come to seek, why not, a median line. Regarding Ethereum, this bearish reaction on the defense zone is really important. Here, they might correct to try to find that replication, and then this bullish momentum may want to seek its own. It will be here when they have to fight for the breakthrough or non-breakthrough of this structural zone, since overcoming it would have implications in the crypto market. Assuming the hypothetical moment is very long, very positive, but as mentioned, we will enter to evaluate when the time comes. Now, reviewing Bitcoin, of course, we will give great importance to this trap that pushed the price up, but the fact that we are visiting the origin of the breakout of a much larger structure is important. Therefore, we will see how they do it, but why not expect some kind of correction to later seek the bullish replication? Here, we'll wonder the million-dollar question, whether smart money will want to defend what we think is a distribution process that has led cryptocurrencies downward, or, on the contrary, not at all. When the time comes and in advance, we will share our unidirectional opinion, as we usually do. Now tell me, are you going long or short in the crypto market? Let me know in the comments. And if you liked this video, give it a thumbs up, subscribe to the channel, and click the bell so that YouTube notifies you of future posts. And of course, I invite you to share this video with your friends and other crypto or trading communities. Now, good luck with your operations, and see you in the next one.